All right, good morning, everyone. Let's get started. Fresh off of a non-event of a session again in U.S. markets. We finished pretty much dead flat. You can see 0.09% move to the downside on the S&P, 0.03% of a move to the upside on the NASDAQ. Things really hopping. It looks like there was actually quite a big move there toward the end of the session, but it wasn't. We saw a spike up about 7 or 8 points from where we were on the S&Ps, and traded back down, within a few minutes. That was on the back of the release of the Fed minutes. We basically had the consensus out of the Fed saying that, thinking that a June rate hike was unlikely because of some of the rhetoric. They do still expect some of the slowdown to be transitory, meaning that it's not going to be permanent, but they don't quite think that the data is there to support them to raise. They also made mention of the fact that they are fearful that the market will react similarly to 2013 when we had the taper tantrum, and that long-term interest rates will spike too much too quickly. So you got all of that was there in the minutes. I don't think any of that was unexpected. The market obviously took it positively at the beginning, and then I guess when they realized that June wasn't priced in, or the people who were buying, it just started to fall back down to that level. We had light sweet crude oil inventories out yesterday, with a drawdown again. It's been a couple weeks in a row where we've had a drawdown. Crude oil prices more or less just kind of stayed where they were. They were already up there a little bit on the day. We had Etsy, which got hammered yesterday on disappointing earnings and worries by some analysts at how many counterfeit goods are there on the site. Yeah, so but not. I mean, there's just really very, very little. You can see that there's very little interest in the market. You can see that there's no catalyst to get the market moving either way at the moment. So we've been on just this permanent drift of late. It's starting to get quite irritating. In Asia overnight, we saw a bit of mixed action. We saw the Hang Seng and Kospi down, Shanghai up again, Australia basically flat, and the Nikkei up a bit. Resources showed us a little bit of a bounce today in Australia. I think one of the things that's important is that right now, out of what's going on in Hong Kong, you see it lagging slightly again today. We've had there's been a handful of companies, Chinese companies, that have been decimated over the last few days. One being the Han Energy, or Hanergy, however you say it, it fell 40-odd% or something in one session 2 days ago. Basically, there's a hell of a lot of, I think, fraudulent activities going on in a lot of the different Chinese companies. I read the other day about one of the companies that changed their name to technology company, even though it's a construction-based company. The share was limit up on the day, and then they needed to create some more assets on their to boost liquidity. They need to create some more assets on their balance sheet, so they bought a website URL and put it on their balance sheet worth $100 million, and then on the website there's two pictures, and then it says this website is worth $100 million. So there's a lot of that going on right now, and that's starting to it's been like the third company within 2-3 weeks that's started to crumble, and in spectacular fashion. I'm just wondering if that's not going to be the start of something. There's been a lot of negativity around China and that whole story, and I just think that that's something to keep an eye on. Well, one of these days, if you walk in the door and you see the Chinese market down 7 or 8%, that could be a bit of a catalyst to the downside, if you know what I mean. All right, chart of interest on the day. This came from Goldman yesterday. It's, they were saying how puzzling the lack of retail spending was in the last quarter, and this is what they've come up with as their best explanation for why retail sales were so low, because they're saying that the market didn't believe that that gas prices were actually going to stay low, and this is their expectations in the beginning of the year were that 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 oil prices would be back up above $100, going out into like the end of the first quarter. But now you're seeing that all of a sudden that they're starting to realize that this is going to be a more long-term thing, and that maybe we'll get this consumer spending boost in the next quarter. That seems a bit optimistic, but whatever. Anyway, all right, we had Sogo Sun out this morning. Headline earnings per share definitely softer than expectations at 166. Revenue softer and divi per share softer. MediClinic came out as well. Headline earnings per share looks like a beat on consensus. Definitely looks like a beat on guidance. I'm not sure if there was anyone else there or what, but then we had revenue, which was soft, and divi per share, but soft. Then we had Investec out this morning as well. I saw a second ago. Sorry, on the Bloomberg terminal here. Sorry we don't have it up here, but I think we were at 308 million pounds versus 305 million pounds expected. So maybe a bit of a beat. I think the divi per share was also a beat in revenue. I don't think I saw. So net income was also a small beat. So it looks relatively solid out of Investec. I saw that the loan loss provisions were lower, which is a good thing. The lending book, I think, expanded by 15+%, which is also pretty solid. So definitely looks like reasonable numbers, I think, out of Investec. All right, we had the PMI numbers this morning across a couple of places, one being Japan, obviously a little bit better there at 50.9. China, a bit of a miss at 49.1. We have the German PMI numbers coming to us at 9:30, European PMI at 10. We've got initial jobless claims in the States at 2:30. Then we've got PMI in the States at 3:45, existing home sales. And then here we've got interest rates this afternoon as well, interest rate announcement. The survey is for 575, which is no change. Although if you look at the forwards market right now, we're pricing in a hike over the next 3 months. So I wouldn't entirely rule it out today. We had inflation numbers a couple of days ago, came in at 4.5%, which is more or less kind of in line with what the expectations were. But considering you've got oil, the oil price that's come off the way it has in those numbers, I think it's still a pretty hot number. All right, let's get into the maps. First one we're going to look at this morning is one of the worst shares in the world to trade. It's called Tiger Brands. It is, we talked about this the other day and came down and tried to drop support intraday this red candle here was when they came out with the trading statement. Yesterday they came out with numbers. Just reading an article on MoneyWeb this morning, they're expecting the Nigerian unit to need to do a capital raise, and that there may be some sort of rights issue because of it. So that could obviously continue to weigh on this thing. The market's also starting to price in this thing may be falling out of the index. So we finally got this thing actually looking like it's dropping support and dropping the 300 level. If we stay below 300, we have a target of about 25 Rand to the downside. We'll chalk it up at 275 for a round number. All right, GFI. We talked about this one yesterday. I showed this in a bit of a cup and handle, inverse cup and handle here, and definitely broke down below support. I think this thing's going to come down and test all-time lows. Just watch it closely. Target well into the 30s, mid to low 30s here. Kumba, which the mining space. If you see obviously all the mining charts. I mean, if you guys have been paying attention at all, miners have been under pressure, obviously, but all the charts still looking very bearish, and a lot of them starting to give up support. You can see Kumba here convincingly dropping 155 yesterday, or day before yesterday. But we closed kind of up toward it yesterday. It really bombed out and gave us confirmation. This thing also looking like it's going to come down and test the multi-year lows here. The next one we'll look at is Woolworths. Woolworths broke out in terms of on a closing basis about 5-6 sessions ago, but we only really closed, or we only actually made new all-time highs and closed above intraday highs, I should say, in I think 2 days ago's session. So we've been consolidating here above that breakout for maybe 3 or 4 days, and we finally yesterday we really kind of popped our head up above it. I think this thing's going to do a straight shot to 100 plus. I mean, technically it's a bit of a gimme. So just keep your eye on that. As long as we hold that 95 level, then I think that we'll probably make a quick push to 100 plus. And the last one we'll look at is Investec after earnings today. We'll see if it has any follow through because we've already broken out over the last couple of sessions. Couple ways you can look at this. You can draw it like that, or you can look at it a bit more horizontally. You know, if you actually draw it on the wicks, you can see here. So we only really broke out day before yesterday at the close, and I think that we've got a nice upside target here, maybe 125ish in Investec. And that's it for today, guys. Good luck out there.